Welcome in a world of almost 10% inflation in US and 20% in many parts of Europe, as in Poland. Welcome in post-pandemic reality, bearing with disrupted supply chains, a world of high interest rates and no quantitative easing. How to make it through, you may ask. Write down in the comments section below where are you from, where are you coming from, and what your problems, you're striving with in your micro world. Today is the new episode of Blockrevision. Let me find out quickly whether we are live, as we've changed our way of broadcasting. That's why I needed to reassure that everything works fine. So we are live, yes, and thank you for tuning in. We are heading through yesterday's Fed meeting, what happened over there, and obviously about the charts. There will be many charts, so hopefully you enjoy. So without any further ado, let's get into an intro. Alright, and economy view is what kicks off our transmission. Let's find out what's the first block of today's Blockrevision episode. More pain to come. That's the one sentence. The outcome of yesterday's speech of Mr. Jeremy Powell. So Fed downshifting to half-point hike, but pointing to higher peak. You have, if you're watching this on your computer screens or on your smartphones, you just right now may have an insight right on the screen of the most important sentences of Mr. Powell. So there are 3 bullet points. I would try to recap them anyway. So he finds out that inflation is coming down more than expected. Key component that's ramping down that gauges is new rental leases that are coming at a level significantly below prior data. So Powell's new economic projections imply an even higher pain threshold than before. Only 2 of 19 Fed officials see the benchmark overnight interest rate staying below 5% next year. So it looks as hawks still outnumber the doves, and Fed is willing to tolerate the equivalent of about 1.6 million lost jobs. Everything to not make the reverberations of the 70s scenario where after the first downward pressure of inflation, we've seen a choke on economy by inflation once again. So we cannot really put our thoughts of the metal in terms of hiking interest rates for now, Mr. Jeremy Powell says. I would debate with this, as we know, this supply chain disruptions is the bigger component that adds up to this inflationary pressure, and that's what's something Mr. Powell cannot fix. But at least in the US, that's mainly the inflation is mainly demand driven. That's why they're trying to stop this down by that what they can control rather than not. So during the speech, Mr. Powell said our focus right now is really on moving our policy stance to one that is restrictive enough to ensure a return of inflation to our 2% goal over time. It's not on rate cuts. The inflation data so far in October and November show a welcome reduction in the pace of price increases. But it looks like Federal Reserve wants substantially more evidence to give that confidence inflation is on a sustained downward path. And at the end, Mr. Powell said that the speed of coming rate rises is less critical now than earlier in the year when the central bank was front-loading rate hikes to catch up with accelerating prices. So he finds that right now these elements are getting better, but taken together, this whole speech brought a conclusion that the Fed isn't prepared to pivot in any meaningful way until it sees sustained and conclusive evidence of a reversal in inflationary pressures. So we are edging closer to something that they think is a terminal rate and that appears to be something near 5%. But whether it happened in the first quarter or second, we don't know yet. We don't know, maybe it may happen even in the second half of next year if inflation won't get extinguished. So that were the main points of Fed meeting. They've risen the interest rate by 0.5 rate. That's what the market was expecting. I'm very curious whether there is a kind of a market's pathway for next meeting. Let's find out on the web. I will try to find out the it's CME Group FedWatch tool. Another FOMC meeting is in 48 days, and right, so target rate probably is for 1st February. Fed meeting is at 450 to 475. So right now the market is also pricing in the lowering tendency and something that the inflation won't get out of control and won't being a rising problem from now on. All right, so we are getting back to our slides, our blogs. So what's the December's dot plot? That what we were just been wondering about. So Powell has repeatedly said he's willing for the economy to suffer some pain to lower inflation and avoid the mistakes of the 1970s when the Fed prematurely loosened monetary policy. So right now they are trying to mitigate this high interest rates pressure, but trying to not make it so fast. That's why in 2023 we are expecting high interest rates by the level of around 5. That's what a majority of FOMC members are tipping on. Whereas some are betting 5.25, but from then on, from 2023, we will get down even down to 4.25. The majority of FOMC members says. Normally, as I told, from the peak of the Fed's interest rates, usually it takes the span of 11 months. That's why if we are expecting the hike in around first quarter, maybe the March of 2023 in the best case scenario, that means in the February of 2024 first rate cuts may take place. That's why we don't expect, and also many market participants are finding out that that might be the time of a possible growth on the market. Whereas I would like to emphasize that usually the market is um, preceding what happens in the economy. That's why we are expecting Fed interest rate cuts in February. That means that the next bull market may start over in second half of 2023. That also converges with also the cryptocurrency Bitcoin cycle that we do know that in 2024 might get another boost due to this halving cycles, embedded halving cycles. So the Mr. Powell repeated that message yesterday that they will stay the course until the job is officially done. All right, market outlook. What happened over there? Let's find out right now what's going on right here. I need to change my window, so just give me a second. All right, it works fine. So we are getting to charts, and on the charts, QQQ is right now in this, I would say, yes, if you have studied Livermore's biography, it's one of the biggest, one of the most prominent trader of all time, the Livermore, Jesse Livermore, told that it's kind of a pattern that's called a Livermore cylinder. Just I will let you know what's exactly this one. And looking at images, many of them finding out that this cylinder usually takes a move forward. So, but it's, I would rather say that it's one of the most noisy technical patterns that I ever seen. That's why I would rather watch in a macro view where this QQQ right now haven't crossed this downward line. So it means virtually for me that US 100 is more likely to get downwards. So QQQ right now is trying to have its way towards higher levels, but there were that many attempts that I'm personally doubting that that may happen. That may happen in the next few weeks, especially with Santa Claus rally already ending up within 9 days, I guess. So it's 1 week by the end of the Santa rally to over, and we haven't made any specific move to end up this tendency. That's why another drop is highly desirable. All right, so getting back to what we are right now, crypto outlook, and in the crypto outlook, let's find out in what's happening underneath the problems. So FTX still is the one that the problems. This is going on beneath the crypto curtain right now. Right now, I would like to approach another topics that also are looming large in this industry. So black swans keep orbiting. The deputy minister of Russia explained that power engineers in a crypto mining hotspot of Irkutsk can now identify domestic miners by analyzing load data at power substations. So we can find that Russia is trying to take and to destroy another sector. They are not at that bad position where they previously set the scene for cryptos to thrive right over there. But with the years to come, it's only getting worse. So if you just find out what's how the hash rate among countries is dividing, you could find that Russia is the third one, a country that has the biggest hash rate among any other. So Russia is not bad positioned to this crypto evolution or revolution, whatever you may call it. But right now, crypto mining regulation is still yet to be approved, and right now it looks like they make much more obstacles for miners rather than the elements that may push this industry forward. So when they are isolating themselves by these political sanctions due to this invasion on Ukraine, they also finding out being such silly in terms of cryptocurrency. So this regulation of crypto mining may be paved for industrial mining to get legalized in 2023. But will it happen? It's yet to be seen. So I'm as we do know that mining is the one thing that has collapsed the industry in 2018. So when there was a miners exodus 2018 as well, with 2020 is 2021, we had those major drops on the market. Right now, let's find out what's going on among miners, and for this one I have a bunch of statistics for you. So let me find out. Okay. Sorry for this bit of a lag. Okay, so we are opening the CryptoQuant. So there is a dashboard. You may build it by yourself. So dashboard consists of the most important, in my opinion, charts. In terms of miners, don't we have miners right here? Oh yeah, sorry. The miner outflow is right at the first, so I haven't noticed this one. So in terms of miners with different polls, you may choose it right here. I would like to have a look at the majority of tendencies, and we've seen the miners outflow during this recent slump of FTX. But right before, there were some of the exodus happening right before this bull run been over. That's why I do find that a majority of miners still are mining Bitcoin in terms of hash rate as well. I would like to find out in terms of hash rate. We do have still a very high level. That's why we are nowhere near from nowhere near from the call that this market might be over. Right now, that's one of the threat for the market, where we may find out that with every single collapse in price, this hash rate should also take its path downward. This time we still haven't gone through. That's why it's still giving this chance for slide even um, further, where the biggest slump was during July and August, with rising energy prices in the United States, as well with Russia. These tendencies may revert eventually. For now, total hash rate is rising and is performing very well, but how much would it happen? For the next element, just find out. Let me undo. So we were through with mineral flows. Right now, estimated leverage ratio has dropped after recent sell-off. So we can find right now the interest in leveraging crypto is resetting. So it's optimistic for seeking out the bottom. And MVRV ratio, if you don't know what MVRV ratio is, we've brought this up in one of the recent episodes. So the rather than when it's with market capitalization, then using the last traded price as with market cap and multiplying by the coins in circulation as seen in market cap, realized cap. MVRV is somewhat of the ratio between market cap and realized cap, and realized cap approximates the value paid for all coins in existence by summing up the market value of coins at the time they last moved on the blockchain. So it's kind of the average, the trying to find an approximation of the value of coins recently paid on the blockchain. That's why it's another way of looking into this data. And MVRV by some is more objective to market cap, as we are right now getting to the levels of oversold. So that's also favoring the future rise. A pool multiple also is somewhat in the on the bottom, and open interest in Bitcoin is lower than when it was in 2021, or just getting down to this July's levels. So In terms of Ethereum, that's the thing is getting kind of similar, but you may find out that open interest is still relatively high to what was during 2021, and finding out that Ethereum might be prone to move quicker than a Bitcoin in the next cycle. That's very interesting to watch. Right, and to not getting this much longer, let's get down to market mover section, and with this one we are heading into a, sorry, not this one, we don't have calendar right here. Oh yes, we have the calendar. So what we are through on, let me get this week. On Wednesday, Fed interest rate decision was right now at 4.5. We already know it. Balance of trade in Japan. Let us find out. So in 25-year period, right now this very low purchasing power of yen is definitely not favoring the this balance that right now is suffering very much. In terms of other element, on Thursday we had been going through Bank of England interest rate decision, and it's also at 0.5. What about the ECB? It's 0.5 as well. About the meeting, I will tell you about in the next episode more in a more particular way. At this meeting, at press conference, we'll know about the quantitative tightening, how it will go, and that's very, very interesting indeed in terms of future performance of euro currency. And tomorrow we have retail sales from Great Britain and PMIs out of the Europe, as well with US. So tomorrow I'm off. That's why there will be a kind of another informative episode being published. So don't be afraid. We are still with you. Just follow up the content. If you haven't subscribed, you may do it right now. I won't get offended. Okay. So in terms of market movers, it's that right now. Let's jump to trade idea, and in this element, let's find out what's going on with WTI USD. So I've told already yesterday that I'm expecting many of those indexes as well with commodities to peak at Fed's conference and to correct on that move. Yesterday at Fed's Powell conference, we've peaked at that level, and right now with this evening shooting star, we are right now setting off another correction move that may lead us to at least previous lows of 70.6, and it may get down even to another levels that have been assigned by this green lines you may find out right here. And what exactly is the point of, I will take it to daily chart. So we still have a chance of getting not only of 7% drawdown, but as well with 11.5 and 17.8 from here. So for me, those lines are the profits, the profit levels of where the WTI may stop. So if you want to know what my strategy is for WTI, it's that trading board. If you haven't taken any of positions right at this highs, I would expect this still may not be very bad place, but that's the one you may take with a lower risk reward ratio, as this ratio right here with hitting out this risk reward is just at 4.16. With lower point, it's at 6.77. So it's still decent, but if you are the laggard, I would be very cautious in terms of possible rebound and revert of the price somewhere between those levels of 77.5 and 76.5. So you may catch that moment where the market is breaking through this downward, this support that right now may get a kind of a resistance, but just be aware of a possible move upside when it won't break lower right now. Oh yeah, as we can see right after such of a candle builds up. So on a longer time horizon, in my opinion, that's one of the most lucrative bets right now. That's the position you may hold throughout at least 1 or 2 weeks for best results. This lowest point may be achieved within a month. That's why I would hold it even longer. So in my opinion, WTI USD is the one that eventually will get lower to the levels that been seen back in August 2021 and following this November 2021. But as always, remember about being reasonable with taking investment decisions and not get too aggressive. So make it a marathon, not a sprint, is the right conclusion. And remember about stop losses, about alarms, alerts, and everything you need to stay profitable with minimizing the risk. So thank you very much for watching. Tomorrow at quarter to 9 a.m. we'll let out another episode of Blockrevision, but that will be more informative about a technical analysis and the kind of a my point of view on some of the matter. That's why I'm inviting you tomorrow, and on Monday we are getting back with normal episodes. Thank you and